Well, Happy New Year, everyone. I hope it was a great holiday for you and you had some wonderful time with friends and family, but now it's time to get back to work. For those of you that don't know me, I've spent the last 10 years as a day trader, short-term trader, a little bit of long-term investing in there, and I've taught thousands of people how to day trade or invest for the short term. Now, every year about this time, we'd get together in an online meeting room and we'd kind of talk about our goals for the next year, basically a big rah-rah session to get everybody excited. Now, if you're a trader, a little tough to share your New Year's resolutions with other people because you might know that, other people are trying to quit chewing their nails or trying to shed a few pounds maybe, but your resolutions are always focused around trading. Stop losses, better entries, better money management, whatever it might be. Am I right? Well, this year I want you to think of things a little bit differently. What if we start the new year with a new strategy? Now wait. Before you go hitting the thumbs down button or bashing me in the comments section, let me explain. I'm not asking you to get rid of your existing strategy altogether or to develop a completely new strategy from top to bottom. But if you have even one day's experience trying to trade in the markets, then you know that things change quickly, and so you always want to be looking out for new ideas, new things that might make you better. So today I want to give you 4 things that may help you expand on your trading strategy and maybe make it a little bit better. Number 1, where are you looking first thing in the morning when the market's open? Almost every trader that I know is looking at gapping stocks, and this makes sense. It's a perfectly logical place to look. There's a lot of activity, there's a lot of trading volume, and we kind of know that the stock is going to start higher or lower based on some kind of news. But how about this? Have you ever looked at stocks that started positive and then immediately went under the prior day's low? Or what about stocks that started with below average volume, but after the first 5 minutes saw a spike in volume? The point is, there are plenty of other opportunities while you're looking at your go-to strategy first thing in the morning. Why not set a scanner to take a look for some different ideas, even if they sound ridiculous? Just see if you can spot some other opportunity. Don't do anything about it, just keep an eye out for it. Number 2, have you considered scaling into your positions? Now, not all day traders jump in and out of the market all day for 5-10 cent profits. Some traders actually like to look for what they hope will be a long-lasting trend that goes throughout the day. Now, if they can find this, a lot of times people will buy some shares, then add into a winning position. The goal here is to build into a winning position where your average cost is slowly dragging behind, which gives you even more wiggle room as the stock is bouncing back and forth. And hopefully that position develops into an even bigger winning position. The other way, which can be a bit more stressful, is when traders try to add on the way down. Let me explain. The strategy here is simple. You believe that a stock will bounce at some point in the future during the day, and so you decide to buy shares as it pulls back, hopefully temporarily. By doing this, you're building a position temporarily, taking a loss every time you add shares, but if the stock does bounce, then you'll have a large position as it bounces and you'll make a larger profit, hopefully. In either way, many traders do scale into their positions, but if you haven't tried it, give it a shot. Maybe buy in 2 pieces. If you normally buy 500 shares, buy once, buy again, whether you're buying on the way up or on the way down, give it a shot. You might like it. Number 3, is this the year that you automate some or all of your strategy? Now, I was really into this for a while, and at one point I had 3 people in a room and we were monitoring as many as 20 live automated trading strategies. Now, I'm not saying you need to go this crazy, but with a little bit of effort and some research, you may be able to automate your trading entry or maybe even have a dynamic stop, a dynamic profit target. There's plenty of things that you can do really easily to automate some or all of your trading strategy. Now, there's some really great trading platforms and software out there that make this really easy to do. Now, if you really want to take it a step further, you can even go back in history and see how well that automated portion of your strategy or the whole strategy together would have done. Would it have made a lot of money over the last 20 years, the last 50 years, or would it have been pretty unsuccessful? Hey, and backtesting has gotten a lot better. The software has gotten a lot better over the years, so don't go bashing me in the comments section until you've seen it. Okay, the number 4 way to expand on your strategy for 2017 is to expand your statistics. To this day, I still help some of my old day trading buddies, and we mostly just talk about statistics. If you're day trading, you better be able to tell me at least the basics of your trading stats. What's your win-loss ratio? What's your biggest loss? At what time of day are you the most successful? What symbol do you make the most on? Are you a better futures trader, stock trader, gap trader? With technology today and all the apps that are available, the software, the spreadsheets, you name it, you should be able to get more stats than you even know what to do with. Now, I'm not in the day trading game much anymore, but every now and then I do get an itchy finger and I love to talk about day trading. Now, if you think I can help you in any way, feel free to subscribe to our YouTube channel, leave me a comment, or contact me directly. I'll put my information right here.